Hi everyone, Nick Shaheen here, recapping week ending May 16th and looking into next week. What a week it was today. This week. Just like last week, we had a whole bunch go on both sides of the fences for bears and bulls. Today was an exceptional day in my opinion. Although I'm going to say it again, I said it last time that even though we have so much uncertainty, there are very certain things. We have clearly defined levels in several of the tickers out there, and that's how we were trading. This past week, to recap what we did to make money, is sold the pops, and I won't call them rips anymore because they're not. They're more like relief pops. It pops, and we're selling it. We sold them, and we also sold the dips, the doom. We sold the doom, and that's how we're going to proceed for next week. I will recap the week first. The end of the week was exceptional. The start of the week was exceptional. Middle of the week was very disappointing. Tuesday, Wednesday, very disappointing in the middle of the week. But we started out on a good note and we ended it on a good note. Yesterday, even though we closed red, my note to the members was that we had a bullish tone and we should come into strength without any headlines. The real estate, I said the real estate reports that came out this morning before they open were going to influence us one way or another. Luckily, they came in better than expected, but so they didn't contribute to the downside. However, they didn't add to the upside, and we fizzled. And before the open, I saw a few opportunities, mainly in the small caps, because now CNBC is concentrating on the small caps like it's a newly discovered thing. And I saw an opportunity that we're going to have strong support at 108 in the IWM, and we have a chance to run into 110. And I sent out a note to that effect, and I acted upon it, bought some calls at the weakness, and I'd like you to guess where the low of the day was for the IWM. It was almost exactly 108 right here. Whoopsies, it was I think 108.02 or 5 or something like that. So 108 was strong support and it held, and I took advantage of that, and a whole bunch of people did too that listened. I'm glad to hear that they messaged me with that. And then it ran into, tried to get to one, as a matter of fact, what is this, 109.9 after hours. So looking at things, it almost like played out almost perfectly. So what I'm going to do is claim victory on this one, and that we saw it coming. And it's not a one-off. If you study your levels, if you study your tickers, if you track if you maintain your watch list properly, you can do the same. And if you don't, sign up with somebody that knows how to do it. The levels are very defined, even though we have so much uncertainty. It's so weird that the levels are so clear. So what we're doing is just selling the meander trade. Basically, if you want to visualize, it's an iron condor, collect premium. So today's move was expected for me on the small caps. Midday, the VIX decided that, yes, I think the markets are going to run. I'm going to flip from +2 to -2%. Indeed, somewhere in the middle of the day or middle of the morning, it flipped and decided to proceed downwards, and this is right here. This is intraday. Whereas the TLT, which is the market killer, it decided later than the VIX. So, and it tried a couple of times to reclaim its glory of pop. And as long as it stays under this red here, I'm okay with it. But the problem with that is that it's in an uptrend channel and it's trading inside of it. Hopefully it doesn't break out. It has broken out on several other views, but it's still concerning. I want it to stay in check. I don't want days where it's ripping like yesterday. So we had a nice close. We had a nice settlement above 1870. I'm sorry, for the SPX. So those of you who sold the 1870.65 credit put spread, you came out on top. So all this is positive. And the fact that the Nasdaq didn't get clobbered, we saw some weakness in the momos, but not as badly as yesterday. And as a matter of fact, I saw some green in the momos before the market turned, so it was encouraging. There were a few red ones: Baidu, LinkedIn, and Twitter is probably the reddest one that I can think of, FFIB. But those are probably individual stories. Market wide, there was optimism. I say that the bears should be nervous. We had a good market action today. So looking into next week, how we can make money. We can make money by doing exactly what we did this week until things change. My overall thesis is that I don't see doom with the givens that we have. With the parameters that we have, the doom is not likely to come. What's going to bring about doom, if ever, if anything, I should say, is a new shoe to drop. We need a true black swan. Black swans, everybody's expecting it. It doesn't come. You don't know what's going to hit us that's going to bring us down. A debacle, a financial debacle in Asian markets, maybe some, God forbid, some natural disaster somewhere that, something. There's going to be a new trigger. The triggers, what we have on the plate right now, we've been seeing, we're watching. We're all in the car. We all have our seatbelts on. We all have the puts. We all have, inverse trades. We all bought TLT. Everybody's ready one way or another. So with the current parameters, everybody's ready for the outcome of the current parameters, the bad outcome. Something new will come to bring us down. With the current outcome, I'm still not a doom caller. I am a doom seller. So I'm taking advantage of this nervousness, and I'm selling SPX credit put spreads, for example. And to hedge my bet, I'm selling credit call spreads. The levels I share with the members every week, but in just 1900 has been a wall. I don't sell at 19. I give myself a buffer. If you don't know what you're doing, you should pay attention. You can contribute to the upside, participate, I should say, to the upside by, instead of selling, by buying. But buying and waiting time to work against you kills your premium. That's why I prefer to sell, as long as I know what I'm doing, and as long as I have a clear level. One thing I'm not doing, and one thing you should not be doing, or anybody should be doing, I should say, anybody that wants to maintain profitability, is chase. Chasing performance this year so far has been a losing proposition. If I'm not on the bandwagon while it's ripping, I'm not going to jump on it, because I'm going to be buying from people who've been on it, and they're going to be saying, oh, I made a profit. I'm going to find myself buying towards the top. I'm not going to make a profit, and maybe I'll lose. So I'm not chasing, especially momos. Momentum stocks need to prove themselves that they can maintain 2 days straight, or at least not lose anything they gain. Look at Monday. They gain Tuesday. Bam. So I am not chasing performance at all. So if I'm not on it, I'll sell the premiums as soon as it gets towards the top, when everybody says they're on it, and then I'll wait for time decay to help me out. So that's what I'm doing. I'm not chasing performance, I'm selling the performance. So selling into momentum is working, unless it's a specific name. Like if I hear a rumor about eBay, I'm not going to sell into that. That I can chase. So pick and choose. Be cautious. And also, shorting an index these days is easier than shorting a particular stock, so to avoid the pop on some sort of a particular stock move. Like if I'm shorting Priceline, and Priceline decides to split up 6,000 ways, increase dividend, pull a trifecta like MasterCard, like Apple and Google, I don't want to be holding credit call spreads into that. So I'm more comfortable selling into the Nasdaq. So my strategy is sell risk at the bottom end to be bullish. So sell put spread in anything that I believe in: Google, Apple, the market itself, and to hedge my bet, I'm selling indices call spreads. For example, I sold the NDX June 38.25, 38.50. It's a $25 wide spread, but it made me a mortgage payment in a couple of days, because then we had the bad day on Tuesday and I just closed it for nothing. Did the same thing last week. So it gives me more conviction in my long plays. I want to be long, but I want to hedge my bet. And this year it's been so easy to hedge my bet as opposed to last year. Last year it was so tough to be short, so I was barely touching anything on the short side. So this year is a lot easier. So that's what I'm doing. That's what I'm going to do next week. I'm going to pick some names, and I may buy some call spreads in certain names. I bought some eBay calls, flat out calls for dirt cheap, and they quadrupled within minutes. I cashed half, so now the rest that I have on are free. So I think it's a good time to look at eBay as far as a lotto ticket. Why is that? Because technically, first of all, there are rumors around it. So when there's a rumor, there's something of the truth. Second of all, it seesaws, right? So here we had a head and shoulder, and it satisfied itself down here, and here it looks head and shoulder-ish, and it satisfied itself around here probably, or thereabouts, from that ridiculous stop here. So now it has a giant candle, and looking at giant candles from before, from these lows, it has a chance of ripping up. So this is a strictly lotto play based on what I heard today. Made me a good sized amount of money, and a good amount of money, and I'm riding it. So I don't think it's too late to jump in just as a lotto play. I'm not going to pile in thousands. A lotto is a cheap play that has a very low chance of success and a pretty decent payout, just like a lotto ticket. So throw a few $100s on a call or a call spread into eBay and wait. It looks like it's going to run all by itself, and tack onto it the possibility of an announcement of sorts. Why not? I'll do it. I did the same with Yelp, although I'm down a little bit on the Yelp, but I'm hanging on with the Yelp. I did them in June, so I'm not worried about it. Also a lotto ticket. You can't return a lotto ticket. So I'm not going to sell it. I bought it for lotto. I didn't buy it for protection. The specific job of it was lotto. So Apple, somebody asked me about Apple. We can't go without talking about Apple specifics. Okay, somebody said, I want to sell some credit put spreads in Apple. Sorry about all the lines, but just look over here. Not a lot of lines. I like Apple. Prospects are excellent. They're probably not going to repeat the performances of before unless they discover the flying car or they release the flying car. I don't like a few things. I don't like the fact that it is toppy and it's failing at 600, and I don't like that I can't short it too strongly. I mean, I am shorting it via credit call spreads above 600, but what if they do come out with an announcement? So I'd rather go long it if I'm compelled to go long it via credit put spread, and maybe short the Nasdaq. I'd be comfortable doing that. But it's failing at 600, and this is a pretty important level. If I extend it yeah, that'll do the job. This is pretty much, if I do this, I add another stinking line to my lines. So here, see that line I just added? Okay, this is, if you say this was an overshoot when everybody was on the board of Apple going to the moon, went to 700 and failed miserably out from there, then this is really the top from before the overshoot. So here we are back at the top. So now the market is deciding, am I going to overshoot again? But everybody's been bit so badly by it. I think the threat of overshooting is low unless there's a catalyst. So having said that, that creates, let me zoom back in, that creates the potential risk of fizzling. I don't see doom in Apple, but technically it may fizzle. There are a lot of people that bought here and they're scared of losing it, like they lost it from 700, so they might be easy money as far as happy triggers, trigger fingers, whatever they call it. So you know what I mean. So I'm not comfortable selling right here, right now, unless I'm really nimble. Then I can definitely try to do an iron condor where I am confident I can get out of. But say June, maybe even July, in the 530 area under this gap, collect 30-40 cents in premium, that's great. Or even go out to next year, yes, leaps, and sell them down here, and rate of return would be great and almost a guaranteed trade. You know, the theoretical chance of success is in the 90s, and what are the odds of Apple being under 500 or 450, 480, depends where you can get premium. So these are thoughts on Apple. A couple friends asked what I would do with Apple. I don't have any open position on Apple. I'm closing most of my positions almost every day, so I'm ended up day trading just to avoid the headlines. I have a few long positions in nature, but I'm not putting on any new long-term big size positions. So I'm managing the ones I have. So selling risk is paying off. Of course, if we have a market crash, selling risk will cost you money, but at least the cost is known. I know exactly how much I'm going to lose. I'm not going to initiate any naked puts or naked calls sold. but I can sell a spread where I know, okay, the maximum I can lose is $4. And if I win, I make $1. So I'm risking 4 to make 1. Doesn't sound sexy, but if you do the math and do a yearly run rate, that's a pretty darn good return for not a lot of risk, a relatively low risk. If you buy a stock, your risk is 50. It's a coin toss, right? You can be right, you can be wrong. If you sell a spread, you choose the odds where you want to be right and wrong. I say, okay, I want to be 80% right. I want to be 90% right. I'm pretty risky. I want to be 70% right. Different levels. If you don't know about this, message me, reach out to me, sellspreads@gmail.com, sellspreads@gmail.com, or on Twitter at RacerNick. That's RACERNIC is my handle. I answer everybody. We'll show you the ropes on how to do this stuff. So the idea is to sell premium and wait for time decay to work for you. So this week was pretty exciting. I think it ended on a bullish tone. Next week is going to be light, economically speaking, reports. So if we are left alone without any headlines, then I am confident that we should come into the open with a positive bias. So we should meander and maybe move up, maybe make another run. I will update the members with the pre-open levels for next week, so we can again, scalp some nice premium, and we can rinse and repeat. So we will continue to do this for as long as it's working for us. Now, before I go, there are some notes of caution. It's not a bullish market to where we think we're going to rip and rally to no end from here. I have a handful of concerns, so I'm going to run those with you, and you should write them down. We have indecision. By that I mean the NASDAQ runs up one day, crashes the next day, runs up one day. The SPX somewhat more comfortable staying here, but it's kind of like looking around. If you picture a person in the SPX looking around saying, what, is this really, is there a bear somewhere around here? Or so kind of like, I don't know, but ready to run. So that's a concern. Momentum stocks are not hanging on to their bids. I need to see that turn. Spiking TLT and yen. They're both threatening pretty badly. I think, let me see here, the TLT, I forget which slice shows it. I think the 2-year shows it, how it's, yesterday was a bad day. We popped over the yellow line. That concerns me, but we're still within reach of, okay, we still have faith that we may fail around here, but that's a lot of movement before. Anyway, so they're threatening. Weak small caps, complex, but predictable, which is pretty good for me. This week was so predictable based on the open interest. Weak mid caps. That also was my concern when everybody was happy on Monday or Tuesday. I forget what day it was. I was warning there. I see warning signs. So luckily that members heeded those warnings. Free falling TNX. The TNX was just in complete free fall yesterday, and today started out nasty, but it turned around a little bit. Let me see if I can put it here real quick. It seesawed a little bit, but much better than yesterday. Let's pull up the see. That's not good. So this represents the yield on the 10-year, and that's what everybody's talking about, right? So they think that, okay, the bond market is smarter. I don't think it's smarter than the stock market. It's just a bully. There's so much more money in the bond market that they can whipsaw everything around and sound smart. If you can bully your way around and move things the way you want them, then you sound smart. And a high-level disregard of geopolitics. Ukraine is not gone. They kicked the can. They, as in Obama and company, kicked the can until, I think they're trying to kick the can until the elections happen, which is in late May. So those things worry me. Other than that, I'm going to continue doing what I've been doing. And I appreciate your time. 20 minutes on this one, almost on the money. If you have anything special you want to see covered in here, let me know. Again, it's sellspreads@gmail.com. This is Nick Shaheen for Benzinga and the Create Income with Option Spreads product on marketfi.com. Check it out.